Picture this, right? It's 3:00 a.m. on a Tuesday at this massive automotive plant in Germany.
Okay.
The factory floor is pitch black. Like the lights are completely off, there's no break room chatter, no footsteps echoing in the halls. But cars are still being built.
Right. Because of the second shift.
Exactly. Because right now, standing in the dark, humanoid robots are quietly working their second consecutive 16-hour shift. And this isn't, some concept video or a pitch for a sci-fi movie. This is literally just a Tuesday in 2026.
It really is. And I mean, that image completely shatters how we usually think about the future of work, right?
Totally.
For the last few years, we all just kind of assumed the AI revolution would stay trapped behind our screens. Smarter algorithms, faster code, virtual assistants.
Right, chat bots and stuff.
Exactly. But the reality is that the most disruptive wave of artificial intelligence has leaped out of the cloud and, well, into a steel chassis.
Which brings us to our mission today. We are taking a deep dive into a massive stack of cutting-edge sources to understand what is actually happening out there in the physical world.
It's a lot of ground to cover.
Oh, it's huge. We've got investment briefings from Barclays and TradingView, industrial orchestration blueprints from iFactory AI.
Those are fascinating, by the way.
Yeah, super detailed. Plus, some incredibly sobering business reality checks from AI Magics and global market forecasts from Rolenberger and Aranka.
And collectively, those sources outline what is, arguably the most significant technological shift of this entire decade.
Yeah.
We are looking at a fundamental re-engineering of global labor.
So our goal here is to cut through all the, the sci-fi hype and uncover the trillion-dollar reality of what they're calling physical AI.
Right.
We're going to figure out how these robots actually work on a mechanical level, what they cost to build versus, what they cost to employ.
The ROI math is wild.
We'll get into that for sure. We'll also look at how they're going to impact your career and why some of the smartest money in the world is betting this sector will rival the scale of the entire global automotive industry.
Which is saying something.
So whether you are an investor looking for the next big wave, a manager trying to future-proof your business, or just, insanely curious about what happens when machines start walking among us, this deep dive is your shortcut.
Absolutely.
So let's unpack this. Let's look at the sheer scale of what's being called Automation 3.0.
Yeah, to really grasp Automation 3.0, you have to look at the market projections from those financial sources we have. Barclays, for instance, is projecting a $200 billion market for humanoid robotics by 2035.
$200 billion. Wow.
Right, but then Rolenberger goes significantly further. They are forecasting a potential $4 trillion market by 2050.
Wait, $4 trillion with a T.
With a T. And
Yeah.
to put a $4 trillion number into perspective, that is roughly comparable to the size of the entire global automotive industry today.
That is, that's just a staggering projection.
It is.
And what really blows my mind is that this isn't just, a whiteboard exercise anymore. The 2026 production numbers are already out there in the real world.
They're scaling fast.
Yeah, Tesla has already produced over 50,000 of their Optimus Gen 3 units, and Figure AI has over 10,000 deployments across their partner warehouses.
We're really moving away from those massive single-purpose mainframes.
Right, like those giant orange robotic arms bolted to the factory floor.
Exactly. We're shifting away from those and moving toward versatile general-purpose PCs. That's essentially what a humanoid robot is. It's a walking general-purpose machine.
Okay, but I have to push back here a little bit.
Go for it.
If the numbers are this massive, and there are literally tens of thousands of these things walking around right now, why hasn't there been a viral, ChatGPT moment for robotics yet?
That's a great question.
Why isn't my social media feed just 2047 robots doing backflips in factories?
Honestly, that absence of a viral moment is probably the most misunderstood part of this entire industry.
Really?
Yeah. Robotics will never have an overnight viral explosion the way a large language model did. And it's precisely because they are bound by the laws of physics.
Oh, right, because they're physical objects.
Think about how a text-based AI learns, right? You can train it on the entire written text of the internet inside a massive data center in, a matter of months.
It's feeding it data.
Exactly.
Yeah.
But a physical robot requires multimodal physical data. It needs vision, tactile feedback, force sensitivity. It needs to inherently understand gravity, friction, and spatial reasoning.
Right, you can't just scrape the concept of gravity from a Wikipedia article.
Precisely. You have to physically generate that data in the real world through actual trial and error. So the real moment isn't going to be a single software release that suddenly goes viral on Twitter. The moment is happening quietly right now during this slow industrial ramp-up. It's actually a hidden opportunity for those paying attention because the fundamentals are improving dramatically behind closed factory doors, away from all that public hype cycle.
And those fundamentals are what really caught my eye in the Aranka report, specifically the manufacturing costs.
Oh, the cost curve is fascinating.
It's insane. The price of building a humanoid has absolutely cratered. Back in 2020, producing one unit cost around $150,000.
Which is basically the price of a supercar.
Yeah, totally inaccessible at scale. But by 2028, they estimate it will drop to just $12,000.
12,000. It's wild.
That's a complete free fall. And the sources attribute this to advances in incredibly cheap sensors and something called axial flux motors. Which, can we break that down? Because axial flux motor sounds like, I don't know, a hyperdrive from Star Wars.
It really does sound like science fiction, doesn't it? But it's actually a brilliant piece of mechanical engineering.
Okay, how does it work?
So traditional motors are usually long and cylindrical, and they require these bulky, heavy gearboxes to generate enough torque to actually lift something.
Right, which makes the robot heavy.
Exactly.
Hmm.
But an axial flux motor is shaped entirely differently. It looks like a flat pancake.
A pancake.
Yeah. And because of how the magnetic fields flow through it, it produces a massive amount of torque in a very thin, lightweight package.
Oh, I see. So it acts more like a compact, powerful human muscle joint.
That is a perfect analogy. You can slot these flat motors directly into the shoulders, hips, and knees of a robot without adding the weight of all those massive gears.
That's brilliant.
It is. And when you combine that with the collapsing price of cameras and LiDAR sensors, which, by the way, were driven down by the smartphone and autonomous vehicle industries, you get that plunge from $150,000 down to $12,000.
So the hardware is basically becoming a cheap commodity at this point.
Basically, yes.
But looking at the iFactory AI blueprints, they throw a massive reality check at this whole concept.
They definitely do.
They point out that a $12,000 piece of advanced hardware is completely useless if it's just wandering around a factory staring at things.
Right. It needs direction.
They say it needs what they call an orchestration layer. And they define this as the software that connects the robot's physical actions to a company's internal manufacturing systems, like their ERP or SAP system.
That's the digital backend.
Explain this to me, because if a robot like the Figure O2 is running on a brain powered by OpenAI, shouldn't it just be a genius right out of the box?
You're hitting on what the industry calls the sim-to-real gap.
Sim to real.
Yeah, simulation to reality. See, software currently trails hardware maturity by about 3 to 5 years. An AI model might be smart enough to, pass the bar exam or write a flawless sonnet.
Right, the stuff we see every day.
But if you drop that exact same AI into a chaotic, noisy warehouse, it lacks context.
Wait, let me get this straight. The robot has a literal supercomputer brain, but it doesn't know how to physically inspect a weld or pick up a specific cardboard box.
Well, it knows what a box is conceptually, right?
Okay.
But it doesn't know how that specific factory operates. An enterprise doesn't just need a robot to move a box. It needs that movement to be logged, tracked, and verified for compliance.
Oh, like quality control.
Exactly. That is the orchestration layer. Think of the factory's ERP system as its digital nervous system. It tracks every single part, every purchase, every quality check.
Okay, that makes sense.
So the orchestration layer translates the AI's general intentions into the highly specific digital language of that exact factory. When the robot visually inspects a car chassis, the orchestration layer turns that physical observation into a formatted quality control record in the company's database.
Wow.
Without that layer, the robot isn't an employee. It's just an expensive toy taking a walk.
That makes total sense. And because these machines need that highly structured, repeatable environment to gather data and, interface with those nervous systems, the automotive industry has become the ultimate proving ground.
They really are the perfect sandbox.
Yeah. Right, because they have the capital, the predictable assembly lines, and the safety cages already in place.
Auto plants are essentially massive, controlled laboratories for physical AI right now.
And the job interviews happening on these factory floors are just fascinating. We were looking at totally different engineering philosophies.
Very different approaches, yeah.
You have Figure AI's Figure O2 robot on a permanent deployment at BMW, and the sources specifically highlight its fine hand dexterity. It has 19 degrees of freedom in its hands alone,
That's incredible.
Right. To put that in perspective for you, a human hand has about 27 degrees of freedom. So we are getting terrifyingly close to a machine that can manipulate a complex tool exactly like a master mechanic.
And that's just one model.
Exactly. Then over at Mercedes-Benz, you have Apptronic's Apollo. And this thing is hauling 25-kilogram payloads in extreme heat. Over at Tesla's Fremont factory, they have the Optimus, which is this 28-degree of freedom giant targeting a mass market price.
They want that to be everywhere.
And then there's the Unitree H1 at Geely, which operates on a fast-deploying open SDK model.
The diversity of these platforms is really crucial here. Companies are realizing they don't just need one generic robot. They need an entire ecosystem.
It's exactly like hiring different archetypes of human workers, isn't it?
Totally.
Like Figure 02 is your highly paid precision specialist, Apollo is your brute force heavy lifter on the loading dock, and the Unitree model, because of that open SDK, which is basically an open software development kit, like a digital sandbox, it's kind of like the intern you can program and train entirely yourself, rather than relying on a locked-down Apple-like ecosystem.
That's a really good way to look at it. But the true determining factor in which of those archetypes gets hired comes down to the brutal ROI math detailed by AI Magics.
Oh, this part is wild. Let's get into the numbers.
Yeah, so when you fully load a human warehouse worker in the United States with benefits, insurance, and payroll taxes, the cost is between $22 and $28 an hour.
Okay, pretty standard.
Right. But the Figure 02, once you factor in its lifespan and maintenance, amortizes down to just $6 to $9 an hour.
Wow.
And the Tesla Optimus is projected to amortize to between $3 and $5 an hour.
Wait, stop. $3 to $5 an hour.
Yes,
A cup of coffee costs more than an hour of this machine's labor.
it really does.
That is a number that completely breaks traditional business models.
The raw hourly rate is definitely transformative.
Ugh.
But we have to look at the hidden costs that the glossy investor pitch decks conveniently leave out.
There's always a catch. What are they missing?
Well, you cannot just unbox an Optimus and point it at an assembly line. Facility modifications are mandatory.
Right, why?
You have to install specialized charging infrastructure, physical safety barriers, which can cost between $50,000 and $200,000 per site.
Ouch. Okay.
Plus, that enterprise integration engineering we just discussed, building that orchestration layer that can easily run up to $500,000.
Oh, wow.
And the most critical hidden cost is human oversight.
Right, because they aren't perfect yet.
Exactly. These robots are not fully autonomous. They get confused. They drop things. Currently, you need one highly trained human supervisor for every 5 to 10 robots on the floor.
So, if integrating a fleet of these robots costs $500,000 up front and requires us to literally rebuild the factory floor, and we still have to pay humans to babysit them anyway, why are these auto giants rushing to do it?
It's a fair question.
I mean, it doesn't sound like it's actually cheaper in the short term. There has to be a larger macro driver here beyond just saving a few bucks on hourly wages down the line.
There is, and it's entirely about survival.
Survival.
Yes. We are witnessing a severe global demographic collapse. We are literally running out of humans to do physical labor.
Right. The demographic data in the Iranka and Roland Berger reports it's sobering.
It's alarming, honestly.
By 2050, the working age population in the European Union is projected to drop by 18%. China's working age population is going to drop by 24%.
Nearly a quarter of their workforce.
Gone. And the APAC region is considered the absolute alpha geography for deploying these humanoids because countries like South Korea and Japan are already classified as super-aged societies.
Yes.
Japan currently has only 0.24 applicants for every open job in their care sector.
Let the math on that sink in for a second.
Yeah.
For every 4 available jobs in elder care or heavy physical labor, not even one person applies.
That's just unsustainable.
Completely. The labor pool doesn't just need a supplement. It needs a complete alternative. These countries have absolutely no choice but to automate if they want to maintain their current economic output.
Which brings us to the question you are probably asking yourself right now as you listen to this. Is this army of $3 an hour robots coming for my job by 2028?
Well, the AI Magic's reality check provides some very grounded clarity on this fear. Humanoids, in their current state and for the foreseeable future, are task replacers, not job replacers.
Task replacers. Okay, explain the difference.
So a human warehouse worker might perform 40 highly varied tasks in a single shift. Right. Everything from complex spatial reasoning to lifting to communicating with a vendor on the loading dock. A 2026 humanoid can reliably execute maybe 5 to 10 of those highly specific tasks.
Okay, so they're not taking the whole job.
No, they're being deployed to take over the highly repetitive, ergonomically dangerous work, or to cover those pitch-black, lights-out night shifts that human beings simply do not want to work.
And just like the shift from agricultural to industrial work back in the day, this transition is creating entirely new categories of employment.
Huge new categories.
Yeah, the sources list high demand for robot fleet managers, making between $85,000 and $130,000 a year.
That's a great salary.
And there are robot safety officers and integration engineers pulling in up to 160,000. It really is a workforce evolution.
It is.
But as this evolution accelerates, the Roland Berger study highlights a massive divergence in how the world is actually building these machines. We are watching a global arms race split into two completely different strategies.
The geopolitical divide in physical AI is honestly fascinating.
How so?
Well, you have the Western ecosystem, primarily North America and Europe. This ecosystem is AI first and incredibly capital rich.
Right. Lots of funding.
Right. Their engineering philosophy is to build the perfect, highly intelligent, generalist brain before mass producing the bodies.
Mm.
But as a result, they are scale poor. They are iterating slowly on expensive, highly capable prototypes.
Okay, and the other side?
Then you have the Chinese ecosystem, which is deployment first and obsessively scale-driven.
So instead of waiting for the perfect brain, they're just churning out tens of thousands of cheap bodies and throwing them into factories to see what happens.
Exactly. They are utilizing their massive manufacturing base to drive down the cost curve of actuators and sensors through sheer volume.
Brute force.
Exactly. Their AI learns through brute force physical trial and error in the real world, rather than waiting for some simulated breakthrough in a lab.
Okay, but why are they separating so drastically? I mean, why wouldn't China just use the brilliant Western AI brains inside their cheap, mass-produced bodies? That seems like the obvious winning combination.
It does, but they are separating because of the mechanics of global supply chains and export controls.
Oh, the silicon regulations?
Yes, because of strict U.S. regulations on advanced AI chips, specifically the ICTS regulations, Chinese robotics firms simply cannot access the top-tier computational hardware required to train those massive Western-style generalist brains.
They literally can't get the parts.
They literally do not have the silicon. So, out of necessity, the two regions are forced to develop entirely separate, non-interoperable technology stacks. The hardware, the software, and the orchestration layers are evolving in complete isolation.
Which makes this a very tricky landscape for you, the investor.
Very tricky.
If these are two totally separate stacks and a dozen different companies are fighting to build the ultimate robot, how do you play this without making a massive risky bet on a single brand that might, just go bankrupt in 2 years?
It's a huge risk.
But the Trading View briefing offers a really smart approach here. They suggest looking at ETF strategies, exchange-traded funds like Robo, BOTZ, HUMN, or Coidide.
Yeah, taking a diversified approach is the only logical move in a market this volatile. Instead of trying to guess if Figure AI or Tesla or Unitree will ultimately win the humanoid war, you invest in the entire underlying value chain.
The picks and shovels of the gold rush.
Exactly.
You get exposure to the companies making the AI chips, the engineers designing those pancake-flat axial flex motors, the sensor manufacturers, and the software platforms orchestrating the factories.
Right, you're spreading the bet.
It's a bet on the inevitability of the industry rather than the success of one specific CEO.
And when you look at the trajectory of all these enabling technologies, the growth of the sector is basically a mathematical certainty, regardless of whose logo is printed on the robot's chest.
When you pull all these threads together, the plummeting hardware costs driven by smartphone sensors and new motor designs, the absolute necessity of the digital nervous system to translate AI into industrial action, and the brutal reality of an aging, shrinking global workforce, you realize that this isn't just a fun upgrade to an assembly line.
Not at all.
We are witnessing the birth of a parallel workforce. Physical AI has crossed the threshold from academic theory into present-day economic reality.
Who's here?
It's going to reshape the footprint of your local warehouse, the structure of your retirement portfolio, and the baseline mechanics of the global economy.
It is a profound shift.
Right.
But, and this is important, it also introduces an entirely unexplored legal and ethical dilemma, which the Roland Berger report touches on right at the end.
Oh, yeah, the hallucination problem.
Right. Right now, these machines operate inside those structured, safety-caged auto plants. But as the cost drops to $12,000, They will inevitably be deployed in dynamic, unpredictable environments.
Like retail stores, hospitals, public streets.
Exactly. And in the digital world, if an AI hallucinates, a chatbot just gives you a factually incorrect answer. It's annoying, but fine.
Yeah, a typo.
But in the physical world, an AI hallucinating a physical movement could cause a 2-ton machine to behave erratically, resulting in millions of dollars in property damage or severe human injury.
And there is zero legal precedent for that, right?
None.
Yeah.
Existing safety and liability laws do not account for autonomous, self-learning physical agents.
So who's at fault?
That's the million-dollar question. When that inevitable accident happens, who takes the legal fall? Is it the hardware manufacturer who built the chassis?
Or the AI software provider whose neural network hallucinated the movement?
Or is it the human fleet manager who was supervising 100 robots from a laptop 3 states away? The regulatory void is massive right now.
That is a chilling thought. A digital mistake is a typo. A physical mistake is a catastrophe.
Exactly.
And we are going to be figuring out the laws governing that parallel workforce in real time.
We really are.
Well, thank you all for joining us on this deep dive. Keep your eyes on the factory floor. Stay insanely curious about where this is heading. And remember, the next time you clock in for a shift, your newest coworker might not need a coffee break.